Bags! Hey gang, I'm Dr. Who. This is Accounting is a Joke, where accounting makes sense so you can make dollars. Today we're going to take a look at a walkthrough illustration of how to properly journalize the closing process. So if you're unfamiliar to the closing process, don't fret. I dropped the link to get you up to speed in no time. So with that being said, let's get it. Josh Pool's service had the following selected accounts and normal balances listed on December 31st adjusted trial balance. Check out this beautiful, well, it's not a trial balance actually, gang. It's just a bunch of accounts and their balances. Journalize the closing entries for Josh Pool's service. Okay, easy breezy. So here's the deal, gang. At the end of the period after you reported those particular financial statements, your next step is to complete the closing process. So what is the closing process? The closing process closes out all temporary accounts to have a zero balance so that the following year they could report income correctly. So what are temporary accounts? All revenue accounts, all expense accounts, and dividend accounts. So those particular accounts must follow a strict process in which to be closed. So step one of that process, we're going to close out all revenue accounts to income summary. Step two, we're going to close out all expense accounts individually into income summary. Step three, we're going to transfer the net income or loss for the period into retained earnings. Why? Because this is the part in which we're going to manually change the books on the journal. Remember, gang, on the reporting side, we transfer our effects to retained earnings from the income statement to the statement of retained earnings. But we haven't touched the books yet. So we have to manually adjust those accounts through step three. And last but not least, step four, we're going to close out our dividends account into retained earnings. So let's rock and roll. But before we start, let's take a look at those account balances. So based on this list, some of these accounts will be closed out. So we need to go through each account to recognize whether it's a temporary or permanent account. We know, gang, that the temporary accounts are going to be all our revenue, expense, and dividends accounts. Any other accounts are going to be permanent. So as we can see, we have some service revenue of $65,000. We have a salaries expense of $31,000. We have a utilities expense of $19,000. We have a depreciation expense for the equipment of $6,500. We have an insurance expense of $29,000. We have a supplies expense of $900. We have dividends, oh, that's a lot, of $32,000. And that's all of our particular temporary accounts. The rest of these accounts will not be affected, except for retained earnings, of course, in this particular problem. So we're going to start by closing our revenues. And we already know that we have some revenues on the books for $65,000. But in order to properly close them out, we're going to debit the revenues for $65,000. Why? Because we know that on the ledger, our service revenues normal balance is on the credit side. So in order for this account to have a zero balance for the next period, we have to remove it off the books with a debit. So we're going to debit service revenue for $65,000, and we're going to credit income summary. Now, as we already said, gang, income summary is going to be the account we use to close out our revenues, and it's just an account that we pull out the wazoo. It's going to close itself as we complete this particular process. And our explanation will be to close revenue. We're going to check the answer. Bags all day. Moving on. Next, we're going to close out each individual expense into income summary. Gang, our normal balance for our expenses sit on the books on the debit side. So in order to close each one of those particular accounts out to zero, we're going to credit our expenses. And what are we going to debit? Income summary. So let's debit our income summary, and we're going to credit each one of those individual expenses. So we had salaries expense, we had insurance expense, we had utilities expense, we had depreciation expense, and we had supplies expense. So now that we've credited all our expenses, we're going to sum up each individual expense so that we can properly debit the income summary for the total amount. So that would give us an amount of $86,400. And of course, this is the closeout expenses. And we're going to check our answer. Excellent, gang. Now, step 3 tells us to transfer our net income or net loss into retained earnings. On here, it's telling us to close out income summary. Yes, it will close out income summary, but more importantly, gang, we're transferring that income into retained earnings. So how will we determine if we have a net income or loss? Simple, gang. Let's look at our journal entries. We have revenue of $65,000 for the period. We also have total expenses of $86,400 for the period. So, do we have a net income or net loss? Obviously, gang, this is not good news because our expenses are higher than our revenues, which means we have a net loss. And if we subtract those two amounts, we know that our net loss is going to be for $21,400. So how does that affect retained earnings, gang? Anytime we have a net loss, our retained earnings must go down. And since retained earnings has a normal balance of a credit, we need to decrease retained earnings by debiting it for that amount. Therefore, we're going to debit retained earnings for the $21,400. And what are we going to credit, gang, for the same amount? Income summary. You got it. Which will simultaneously close out our income summary account. We're going to check the answer. Nice work, gang. And last but not least, we're going to close out our dividends into retained earnings because we know that dividends by definition is a distribution of income to the shareholders. If we're distributing income to the shareholders, we are thus decreasing our retained earnings. And so we're going to have to debit retained earnings for the dividends amount while simultaneously closing our dividends account off the books with a credit. Remember, gang, the normal balance for dividends sits on the debit side. So to close it out to a zero balance, we must credit it. And so our dividends for the period was $32,000. So we're going to journal that amount, check the answer. Nice work, gang. So there you have it. A beautiful example of how to properly close out our accounts at the end of the period. Hopefully that made sense for you and that light bulb is clicking. If so, please like, subscribe, and share the channel with your friends so they can chase the bag as well. As always, gang, humble pleasure to have you guys sharing time, and I feel y'all getting closer to the bag. I'll see you soon. Bags!